going on, Angelo family, and welcome to the Angelo podcast. In today's video, we're going to talk about how to invest in cryptocurrency. I'm not going to go over any crazy investing strategies. I'm just going to go over what I've done and what I've learned and how it's helped me amass a six-figure portfolio. This strategy is just kind of the basics. I've never been one to just invest in crazy altcoins, do options trading, anything like that. I always felt that for me, my life, my career, the way I approach investing in general is I just like doing it the most simple way. And I'm not a financial advisor. Please, by all means, this is not any financial advice. This is just more or less what I do in order to start investing and how I allow my money to grow, especially because I work so much. I'm a big proprietor of allowing your money to grow for you rather than having to always constantly work for more and more money. That money was very hard earned. Don't come from wealth. Everything I've earned in this life has just been through hard work, through working, and just sharing what I've learned and kind of going through that process, right? So I view myself as more so a long-term investment holder. I hold my positions for a long time. I won't sell it if I don't need to. And I like to invest in the most safest assets that just honestly that I think will work out over time. And I keep everything very short and simple and sweet. So here are the three things I do in order to invest in cryptocurrency. Number one is I have to actually open up a brokerage account or more or less a cryptocurrency exchange account. For me, the main account I use is Coinbase. I actually used to use Robinhood before, but Robinhood doesn't allow you to sell or more or less kind of move your cryptocurrency. They just allow you to have that as an asset. You can just buy or sell it. If it goes up or down, you can do that. You can sell it, but you can't put it into a wallet of some sort for cryptocurrency. So for me, I use Coinbase. I'm a huge fan of Coinbase. Coinbase was founded by, I believe, Brian Armstrong. He is a kind of a tech entrepreneur in San Francisco Bay Area. They founded the company, they've IPO'd, and it has a lot of assets to its name. Also, it's US based, and they've IPO'd in the US stock market. So I do trust the company because they've gone through heavy regulation, as well as they have IPO'd in the US stock market. So their company is well funded through investors, as well as it's very, it has a lot of money behind it, right? A lot of the best venture capitalists like Andreessen Horowitz, they've all backed Coinbase as a company. They've gone through the initial public offering. So it is a very safe company in my personal opinion. And I've just seen it throughout the years. So the first thing you need to do if you want to invest in cryptocurrency, if you want to become if you want to hold assets such as cryptocurrency, is open up a brokerage account or a cryptocurrency exchange account through a brokerage firm of your choice, a financial institution of your choice. For me, that is Coinbase. There are a lot of other institutions that will allow you to invest in cryptocurrency. Just take a look, see what is best available to you. But for me, Coinbase is the most simple because if you're based here in the United States, you can basically connect your bank account through Stripe or through whatever means they have available. And you can connect a US bank account to that. Allow yourself to send money from your savings account and just have that, or even your checking account, and have that used to purchase your assets through Coinbase, right? So Coinbase is pretty great because Coinbase has a lot of financial assets for you to invest in, as well as it has some learning modules for you to learn about cryptocurrency, how to invest, as well as I really love their mobile app. I'm not sponsored whatsoever by Coinbase, but it's just, for me, I've gone through so many different exchanges, tried to figure out I want to buy this asset. Back in my earlier time of investing, I used to try and open different cryptocurrency accounts, different exchanges. Just realized it was such a big headache for me. You kind of have to go through this weird learning process, but if you guys really want to just have a more straightforward experience, for me, investing and buying assets through Coinbase was the easiest avenue for me to purchase these assets. So look into Coinbase, right? Because Coinbase is such a big company, they do have some support as well, which is a little bit better than most companies, as well as they're the easiest user interface to use from my personal opinion, right? I've gone through so many companies, exchanges, but Coinbase UI stands for user interface. And this is something you'll start kind of realizing you'll kind of treasure or cherish more, right? Is the UI associated with the currency exchange you're using. You want it to be simple, you want it to be easy to use, because when you start getting involved with cryptocurrency, there's gonna be like a whole bunch of stuff with your wallets, your hot, your keys, all the good stuff. And you just want everything to be most simple as possible. A lot of my smart friends, I have really great friends who are great engineers, great business people, friends coming from UCLA, from Stanford, from Harvard. A lot of them work at Coinbase, right? So they have great, just a lot of great smart people who are kind of working behind that, great engineers who are working behind that. And they've been around for quite some time now, right? They've gone through Y Combinator. Y Combinator, for those of you curious, is the world's most prestigious startup accelerator in the Bay Area. So companies like Airbnb, Stripe, they've all gone through YC. And Coinbase is one of those companies that has gone through Y Combinator. They have IPO, they have backing from like the world's biggest venture capitalists, specifically in the San Francisco Bay Area. So you honestly, I always believe in hitching your boat to the most like the best company, right? So for me right now, that is Coinbase. It may change in the future, who knows? But a lot of it is pretty good with regards to Coinbase, right? So set up a Coinbase brokerage account where you can buy and sell your assets, and then you will set up your bank account too with that. So connect your bank account to that, and then you can either purchase your assets there through Coinbase, or kind of through the Coinbase website or the app, and that's how you'll buy your assets. And then you'll set up I always recommend whenever you set up any account now in today's day and age, whether it be a brokerage account for your equity investments, for your cryptocurrency investments, for your any account in general, even like your Instagram, your Facebook, your YouTube, always have a two-factor authentication now. So always set up that two-factor authentication. You could set that up through your like a personal app, through Microsoft, through Google, whatever it may be, but always want to have your assets in a safe place. So set up that two-factor authentication for all your assets, so that way you won't get anything kind of taken from you, especially as your portfolio continues to grow, as you continue to invest throughout your time frame as an investor, as you kind of want that, right? So look into Coinbase, right? Coinbase is my number one cryptocurrency exchange. I'm not sponsored whatsoever by them. I'll put a referral link down below. I think if you purchase some Bitcoin, I get some Bitcoin too. Like I think like $10, nothing crazy like that, but it is something to start off, right? For your cryptocurrency and everything of that nature. So take a look at Coinbase as your form of investing for your brokerage account for the future. Always go with the biggest company because usually they're the safest, especially in a asset like cryptocurrency that is still seen as a very speculative asset because we are in the earlier days of this asset. So take a look at Coinbase as your brokerage of choice as we start out, okay? So next thing to take a look at for how to invest in cryptocurrency for beginners is to actually pick an asset, right? So this back in the day, I used to be very I'd always try to invest in the most speculative asset because I thought I'm going to become rich if I pick this one asset. I'm smarter than most people because I've watched 10 YouTube videos, right? I had this persona myself where it's I'm this next great investor, but that was actually always wrong. I've been scammed. I've had people just have coins explode and go to zero, and then I'm left holding the bag, aka there's nothing in here because everything has been sold off. So it is kind of interesting in that sense. So I always pick the safest assets. So the two assets I always pick have been Bitcoin and Ethereum. They've always just been the two that have lasted the longest for me. All the other crazy altcoins I've bought thinking they have a great story, they have a great founder, all this thing, it's they've always more or less gone to zero or never really went up in value. However, Bitcoin and Ethereum have always kind of gone up in value for me, where it's just that people see this as the most safest asset. When I was working in finance, I always realized most investment firms, if they were to take a big asset or big position into a certain asset, if they were going to invest a lot of money for a retirement fund or a large investment fund, they always mostly pick the safest asset. They'd buy a mutual fund or ETF, and then usually if they were to buy an individual equity or an individual asset, it was always a safe asset. And that asset for me, I've seen has just been Bitcoin and Ethereum, right? you gotta realize like most companies, when they have take a large position in something, they either think there's a high chance it's going to go up in value, or they're going to be a long-term play, and they always pick like S&P 500 companies. Like they'll buy lots of positions in Alphabet, in Meta, or like Johnson & Johnson, there's companies like that, because they see it as a safe asset and they don't think like their investment's going to go. There's a high likelihood that their investment won't go to zero, and it will either like appreciate in value or beat the S&P 500, which has like a return of 8 to 9, 10%, right? So always look at the safest asset. If you're like me, right, and you just work like a normal job, or you're building your content out, right, where you want to just hit lots of singles and kind of get on base and just have your money appreciate in value every year or so, you want to be able to invest in safe assets. That's the biggest advice I wish I could give to myself before like investing in crazy stuff, because like I said before, I always thought I was going to be the next great investor, but I was always wrong, right? I thought I was going to beat the hedge fund. I thought I was going to beat the Vanguards, the Fidelities, right? Because I watch YouTube videos and I have a computer. I was not going to. There's billions of dollars in assets kind of invested with these companies. There's so many smart people who have great, amazing teams who are trying to all beat the market. Like, what makes you think that I'm going to beat Warren Buffett? I'm not. So I always pick the safest asset. I always take advice from world's best investors, right? So for me, I always have a long-term time horizon whenever I have an investment, and I pick the safest one, right? Because I know a lot of my wealth in my career will be generated just through going to work or building out my content, my channel, as well as building out a business, right? That's how majority of wealth will be generated. It's not going to be through like some crazy investment I'm going to make. If you actually kind of look at that, right? Most people's money, they don't come from like picking the right stock, right? There are some people in Silicon Valley who go through an initial public offering. I've had friends go through an initial public offering. They'll have an initial equity grant of like around 30,000, 80,000. And then they get really lucky. IPOs, it goes to $500,000, $400,000, or even $1 million, right? That's how some people kind of get rich in the valley, right? But most of the time, like most people like us, like if you're just going to be putting $1,000 into like Bitcoin and you hope it goes to $1 million, that's going to take a very, very long time, right? So a lot of your wealth in this world will be generated through going to work, building a business, or using the money you get from work to build your business, to invest in other assets that will go up in value, right? Think of it as like that, right? And when you're young in your career, when you're trying to figure out finances, when you're trying to figure out who you are, my advice is to take risk, but make sure that risk is calculated, right? You want to hit a whole bunch of singles, doubles, triples, because you're still going to score, right? If you're going to go for a home run, do it while you're young, but don't do it where you go for the home run and you knock yourself out of the game because you put all your money towards something that just exploded, right? So take calculated risk. If you're going to invest in crypto and you want to do kind of a long-term play, buy Bitcoin, buy Ethereum, allow it to ride out. The reason being I suggest these two is because Bitcoin has an ETF kind of plan for it. I believe some have been already released, where a lot of large financial institutions are creating ETFs, exchange traded funds or mutual funds, kind of associated with Bitcoin, because they believe it's going to go up in value, right? So because they do this, they see it as like one of the safer assets, because most financial institutions, if they're investing institutional investors' money, which is money from high net worth individuals or companies or whatever it may be, they have to invest in very safe assets, because if that asset goes down to zero, they lose hundreds of millions of dollars overnight. They lose their job. Investors get pissed off because they lost all their money because they trusted them. So they always try and invest in safe assets. So right now they're building out an exchange traded fund, ETF for Bitcoin. I think one's also coming from Ethereum, because these large institutions see it as a safer play, right? So my advice for you is that invest in safe assets. Bitcoin and Ethereum have been around for the longest time. I remember like one day it was at $300, right? And then today it's at like 3,000 during the time of this video. It was at 4,000 at one time, right? Extremely volatile asset, but through long term, you're going to see like kind of an increase, because a lot of people use Ethereum with a store of value, right? People are using Ethereum to build NFTs, to build out their cryptocurrency platforms, whatever it may be. Ethereum has a store of value, aka it's actually being used to help build a business, help build certain assets or certain like certain things for certain businesses. People are actually using Ethereum. Like a lot of coders, a lot of engineers use Ethereum and they'll build off the Ethereum platform, right? So that's kind of like their form of value for that asset, which is Ethereum. For Bitcoin is like kind of seen as a store of gold. Like it's seen as like not so much. It's not really being used as currency. Granted, you could still buy things with Bitcoin. I remember back in the day, like Tesla was allowing you to buy a Tesla with a Bitcoin, right? Which is kind of crazy. But and some companies are taking Bitcoin as a form of payment. A lot of them have kind of stopped now because they've seen how volatile it is, right? You can't have an asset go from $60,000 to $15,000 in like a day, 2-3 days in a month. Like that looks really bad on a balance sheet, especially if you're a public entity. It looks kind of really bad for investors. Like get kind of pissed off and then your share price goes down. So a lot of Bitcoin, it is kind of seen as a safer asset because over the long run, it has gone up a lot. But the way a lot of investors now just use Bitcoin as a form of investment exposure to kind of a riskier asset that may go up more in values, that they go through an ETF, exchange traded fund. So that's kind of why I feel safer with Bitcoin as something I invest in, because the ETF is seen as something that's a lot safer, where that over the long run, it will go up in value. But I don't want exposure in the sense where I'm just buying Bitcoin straight up, especially if you're an institutional investor. If you're a normal person like me, and you can ride the fluctuations, where in a sense, like I'm still young in my career, I'm still young as a person, and I feel that I will be in the market for the long run. So if Bitcoin goes from 60,000 to 10,000 in one day, I'll be okay because I know I'm going to hold for a very, 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 very long time. So just seeing it as that, right? As Bitcoin, it's going to be here for a while. I see it as a much safer asset. Let me hold it for a long time. If I do purchase a Bitcoin, it's going to be a long-term play. I don't need to sell it tomorrow because I will have it for a long time. Okay. So take a look at that, right? For me, Bitcoin, Ethereum, if you want to get into those altcoins, that's not what I'll be doing. If I do it, I will make a video about it. But right now, I enjoy building this channel. I enjoy building my career, having my income come from there. I don't use cryptocurrency as my main form of generating wealth right now. If it does change, I will make a video on that. But right now, for me, safe investments, enjoying it just through Bitcoin, Ethereum, playing it for the long run, feel safe with those assets because Bitcoin is being used kind of through mutual funds, ETFs right now for large institutional investors. And then Ethereum, they will have an ETF or a mutual fund, whatever it may be. And they're currently building on the Ethereum platform. A lot of engineers, especially in the Silicon Valley, are building their cryptocurrency, their basically their companies through the Ethereum blockchain. So that is one way to look at it, where there's a store of value, and then that can be your avenue, right? I don't invest in altcoins because that's not my game. Some people will do that, but that's not me. So just giving you guys a heads up on that form of investing, right? Number 3, the way you can invest in the tip I have for investing in cryptocurrency is just by opening a wallet. What's a wallet, right? A wallet is where you can store your cryptocurrency assets, so it's not on the internet, right? Because a lot of times it's like cryptocurrency assets are just assets bought on the internet, and when they're connected to the internet, they have the ability to just going away, right? People could take your money, people can steal it, right? So a lot of times people like, you can just get a wallet of some sort, where you can use like Coinbase. Coinbase has a wallet where you can just put all your cryptocurrency in that wallet. In theory, it's supposed to be much safer because it's known as cold storage, where the internet is not connected to the your assets, and you can't really send it out unless you have like some a security code, whatever, being put on that, right? So put your assets into that wallet. The wallet, I recommend just having one wallet, right? If you have 2 wallets, by all means go ahead. But for me, keep it simple with one wallet, and then keep that security key code secret and safe to yourself, because that's what you use to get the assets, right? Be very careful though, because if you lose that code, it'll be very, very hard for you to send your money back out, because it's gonna be locked, right? A lot of money being sent out from your cryptocurrency exchange over to that wallet is locked per se, in a sense where that you can't withdraw the money if you lose that code, right? So put your money in a cold storage, which is a Coinbase wallet or whatever it may be. So that way it's going to be safe throughout the entire investment process, okay? And that way your money, you'll kind of sleep well at night. Like, okay, I have this over here. I won't move my money. It's all safe in here. And then eventually when it goes up in value, I can send it back to the exchange and sell it itself, right? And I know this is like, I said 3 tips, but here's my bonus tip, right? And this is personal finance, this is a business channel. Before you ever invest in a speculative asset like cryptocurrency, or even if you invest in the equities market or the stock market itself, pay off all your debt. This is my last and final tip. Pay off all your debt. Like for me, I made the mistake of like trying to buy crypto, thinking that it's a great idea. I'm going to buy crypto because I'm going to make so much money, right? And I still had debt. And if you've seen my previous podcast episodes before where I talk about working and not having money for school, or like taking out loans for school, for a car, I never paid off my debt and I just kept buying crypto, right? One of the dumbest things you can do. Best advice, pay off all your debt. You will sleep well at night knowing that you do not owe anyone money, and knowing that the fluctuations in the market don't affect me because I have no debt associated with my name, right? So if you get the chance, when you start working, right? First paycheck, use it to pay off debt. Don't buy any speculative assets, right? There is always going to be the next big company, next big cryptocurrency, next big whatever on the stock market, on the cryptocurrency exchange for you to buy. And you're going to be tempted to like just keep getting more and more crypto because you think it's going to keep going up and up and up and up, right? But it's hard to invest when you have debt associated with your name. So pay off all that debt, right? That's the biggest advice I can give you guys, right? If you owe $100,000 just to loans and a car and a mortgage, whatever it may be, yeah, pay off that debt first. I know we're always tempted to like make more money. There's like this flash in the pan, crypto, flash in the pan, like equity that's gonna go up in value. And in reality, it's like the peace of mind you get from having no debt is much better than seeing an asset go up in value, because at the end of the day, like the way you calculate wealth is through your net worth. It's not through how much you actually own, like in crypto, right? So think of it as like, if I have $1 million in like the account, in my bank account, but I owe $2, $3, $4 million in debt, whether because of house, cars, whatever crazy thing you buy. If you have $1 million in your account, but you have $4 million in debt, your net worth is -$3 million. So always invest after you pay off your debt. I'm not a real estate investor. I'm not a wholesale investor, whatever it may be. You may calculate your net worth differently. But as a normal human being who just wants to live life debt-free and have no stress when you go to bed, paying off your debt will solve a lot of their issues, because you can operate in a way where you can build things, you can take more risks when you have no debt associated with your name, because you're not worried that the bank is going to foreclose your home. You're not worried that you're going to get kicked out of your apartment, and you're not worried that your car is going to get repossessed, because you've paid off all debt. You've paid off everything associated with money, right? And like I said before, this is how I did it. I'm gonna give you guys a tip again, because I think it's so important to pay off all your debt. The way I approached all my debt was through the debt snowball effect. You look at the lowest debt you have, right? Say you have 3 debts. One is through your undergrad loan, just keep it simple. One is through your grad school loan, one is through your car. Undergrad loan, you owe $1,000. Grad school loan, $3,000. Car, you owe $2,000. Pay off the undergrad loan first because it's $1,000. Pay off the grad school loan last because it's $3,000, and then pay off the car second because it's $2,000, right? That's how you pay off your debt. Just attack it that way. And then once you have no debt, you can start investing in whatever assets you want to. Cryptocurrency, invest in cryptocurrency. Bitcoin, Ethereum, I think it's the safest play, safest value for you, right? Bitcoin is invented by Satoshi. And right now, a lot of large institutional investors are building ETFs around it, right? So there is a long-term play a lot of investment firms are seeing around this, because their investment clients see that there is potential for that asset to go up in value. Also, they see that it's a safer asset, so that's why they can go build that ETF, and they just don't want direct exposure to the Bitcoin asset itself. because it can go up in value, because the price is highly spontaneous. They see a lot of fluctuation in the market value, but an ETF will allow it to kind of be safer. So they start investing in that ETF. They start buying that, building that out. And then they also start doing one for Ethereum because they see that it is similar to Bitcoin. It's a larger asset. There will be less market fluctuation price behind the ETF. And they also see that there are a lot of engineers building companies off the Ethereum blockchain, right? I believe the founder of Ethereum was Vitalik Buterin, and he was actually I think he's a Thiel Fellow. For those of you curious what a Thiel Fellow is, it's like Peter Thiel, who is the founder of PayPal, one of the founders of PayPal. He has this thing called a Thiel Fellowship where you drop out of college, he'll give you $100,000, $150,000 to start your business and build a company. It's kind of crazy. And Vitalik was one of a very skilled engineer who did this, who started his own business, which became the Ethereum blockchain. So if you guys are curious, I think it was like back in the day, it was like around 10, 20 bucks now, and then it's 300, now it's 3,000. So it has gone up in value, and Vitalik has become a multimillionaire or maybe even a billionaire, who knows, because of the Ethereum blockchain. So they have a really strong founder behind it, strong community behind it, because a lot of the world's NFTs, which is something we'll create a video later on about, is uses the Ethereum blockchain, right? That's how you transfer and purchase NFTs, is through the Ethereum blockchain, right? And that all is created by Vitalik, right? So that is kind of why Ethereum is seen as a safer asset, because there is a form of value to it where the blockchain is being used to build NFTs, to actually sell NFTs and go through that whole exchange, right? Cryptocurrency is a very speculative asset. Let's not ever forget that this is so brand new. This is all very, very speculative. So all the money you have invested in cryptocurrency, it can honestly just go down to zero, and you'll be left wondering, why the heck did I invest that? Why didn't I just invest in like a safe equity like a Google or an exchange traded fund, BT Sachs, that just mimics the S&P 500, right? It's because a lot of us want to take on risk in hopes of it going up and up in value. But because we are taking on risk, you need to be more comfortable with that risk actually having your asset, your Ethereum, your Bitcoin going to zero, right? Cryptocurrency is going to be extremely, extremely, extremely risky. And the regulation isn't there yet because no one knows how to do it, right? Coming from the Silicon Valley, I understand, and also kind of work at UCLA, where I've had a lot of legislators, lawmakers in Washington. I've had like governors come teach my class. They always talk about how Ethereum, Bitcoin, cryptocurrency, it's a very risky asset. They don't know how to regulate it yet because technology hasn't caught up with legislation, with law, right? And that's a similar thing that's going to happen with artificial intelligence, where artificial intelligence hasn't caught up with legislation and law, right? It's just how it is. Technology progresses so fast, while law, legislation takes so long because there's so many checks and balances associated with it, right? As opposed to a line of code, you can write it in a night, a day, you can push it out. If it's good enough, people will use it, and then you can actually start a company in a year or 2 years. That's why you're seeing so many billionaires, millionaires being minted in 5 to 10 years, because of how scalable and how fast code is. Legislation is not like that yet. But cryptocurrency is kind of similar, where it's that this thing is like being used, Bitcoin is being used as a store of value. Ethereum is being used for building out companies. So it's going up in value so fast, but also because it's going up so fast, it can just crash so quick. I've seen it go from 60,000 to 30,000, like 15,000. It's crazy. It's crazy, right? So you need to make sure you pay off all your debt before investing in these assets that are extremely, extremely, extremely speculative, okay? Jello family, I hope you guys enjoyed this video of how to invest in cryptocurrency. As said before, I'm not a financial advisor, not a financial expert. I'm just sharing you with how I've invested, how I view the markets, and what I think you should do in order to just invest, right? Just sharing you my experience. Please like, comment, and subscribe. Take a look at my Instagram down below. Follow that. I do have affiliate links down below with basically my setup on what I use to record all these videos, what I use for UCLA, what I use to just learn everything. Take a look at those affiliate links down below. I do get a commission. I also have a Discord where I'll help answer any questions you guys may have from my community, because I appreciate you guys. So That Discord will most likely have a subscription fee associated with it, so take a look at that. I'll also probably have a free one too, so we'll just kind of do both. Take a look at my other channel, Angelo Carlos. That channel is Tesla content. I post a ton of Tesla stuff because it's my favorite car right now, so that's kind of what's going on there. But Jello family, please like, comment, and subscribe. From the bottom of my heart, I appreciate you guys so much. Thank you for allowing me to be of service to you guys, to share everything I've learned through UCLA, through Google, through business, through finance, through investing. It means so much to me, Jello fam. I hope you guys have an amazing day. As always, from my bottom of my heart, thank you so much. Yeah, I'll catch you later, Jello family. Peace.